Hello everyone and welcome back to Real Crypto. Today we're going to discuss what to expect if and when we get back down to Bitcoin 3000. If you're new to the channel, we've been analyzing Bitcoin for some time and we've been correct at every turn. We saw the topping pattern in Bitcoin, we nailed the $3,000 bottom, and we really haven't been really bullish since then, but we haven't had any bullish action lately. So I'm not going to prepare for the next test of 3000. And what should we look for when Bitcoin gets back down there? Now, as traders, it's our job to prepare and have a plan for nearly all situations. Now, my personal plan put me in cash a few weeks ago, but for many of you that I talked to in the chat room, it appears we still have a lot of holders that are getting nervous as we get lower and lower. So I'd like to go over a few particular scenarios and in no particular order. So scenario number one, we get back down to 3,000 on lighter volume, and at 3,000 we bounce up in very good volume. Now, as you can imagine, this is the best case scenario and it indicates that there's limited selling and a lot of buying pressure. Okay, so what do we have happening here? So if we look at the charts, we can see the volume pattern here. We kind of see a limited upside volume here on this rise, and we see kind of some increased selling pressure. Well, if this selling pressure slowly starts to decrease, but we still churn lower, that indicates that obviously there's less selling. However, we're still going lower. All right. Now, if and when we get back down to 3,000, if we get a really nice volume pop here, that's going to be gorgeous. Something like this, you know, maybe 2 or 3 bars. It just kind of depends what happens. But if we can get that large buying pressure, then we're definitely going to be in a bull mode. Okay. Now, the reason there's light selling going down is because, number one, the sellers have dried up, but the buyers are waiting for a bargain price. They're waiting for it to go down lower and lower and lower. Now, in this scenario, 3,000 is going to be that bargain price. It could happen at 3,100, 3,050. Could even happen at 2,800. You know, you could get shaken out under this low. It really just kind of depends. All right. So now, if that happens, how do you trade that? How do you actually make money on that? Well, the first thing you do is you have to go down to a much lower time frame, like a minute or 15-minute or a 5-minute chart. Reason being, you want to see the volume come in on that low charts, and you want to make sure that it's buying volume and not selling volume. And the only way to do that is to really look at the smaller frames. So when you do that, you want to have your orders ready. And when you have your orders ready, you do need to consider a few things. How to put in an order. Okay, now first of all, this seems simple, but it may not be. Market orders are preferred. What a market order is that when you place a market order, you hit enter. You say, I want to buy 1 Bitcoin. Boom, you hit the enter button. It's going to find the best price for that 1 Bitcoin and it's going to fill it. Now, it can fill it at multiple different levels, but it's going to find you the next best price. Unfortunately, in the cryptocurrency markets, a lot of exchanges don't let you put in market orders. Exactly why, I'm not sure. I think it may have to do with some liability reasons due to fraudulent exchanges. They want to make sure that you are setting what you want to buy the cryptocurrency for. That's my personal opinion. So you're going to have to put in limit orders most likely. Now, if you're doing limit orders and Bitcoin hits 3,000 and you start seeing buying right at 3,000, so say you see volume increasing and price isn't going down at all, right? That's a good sign that there's a bottom. Okay. Now, you could be also watching the order book and watching it hit the ask time and time again. If this occurs, then what you want to do is you can set your limit. You don't have to set it at 3,000. You can set it at 3,020, 3,030, 3,050, whatever you feel comfortable. If the price is jumping up incrementally, like from 30.10 to 30.20 to 30.30, you may want to put it at 3,100 just so you get filled. That doesn't mean you're going to fill at 3,100. That means that your order is viable up to 3,100. So if it's at 3,020 and you have an order in for 3,100, you could get filled at anywhere between 3,020 and 3,100. All right, now on to scenario number 2. In scenario number 2, we crash hard into 3,000 and bounce or consolidate with less volume. Now, it may not quite get to 3,000, but it gets down to that level. And if this were to happen, you really want to step aside and do nothing. Because if we crash hard and go sideways, that implies that there's no buying pressure. So you want to just sit and observe at this point. Now, consolidations or continuation patterns, and consolidating just before a key support level is actually bearish action. So if we get a large sell-off down here and then we start to consolidate right here above 3,000, that's going to mean that we're consolidating to push through 3,000. All right, you can kind of see pretty much every pop down consolidates, and that gives you the next momentum to go down. So that's what we're looking for here. We're looking for a large pop at some point in time, a consolidation. Now, maybe you say, you know, Randy, maybe it kind of drifted down, popped down, and then consolidated. How do I know when to buy? How do I know that I can't, how do I not buy in scenario number 2 and I buy in scenario number 1? Well, the first thing is the volume leading downward. The volume is the key. If you have large volume going downward and it stops, I would step aside. If you have weak volume coming down and then it consolidates on weak volume, you do nothing, and that's kind of scenario number 3. But we're going to get into that. But so in scenario number 2, you step aside and you do nothing. Okay, you literally just watch because your money is at risk. So scenario number 3. We see lower spikes of selling. We consolidate just above 300 or 3,000. Now this could lead to what's called a choppy market, and be careful not to overtrade in this environment. And this is the hardest pattern to determine price movement because you're going to enter a trendless market. So this kind of combines scenario 1 and scenario 2, both in low volume. All right. So we're just going to kind of drift lower here. Kind of, you know, just slowly drift, move around like this, but our overall trend may parallel with this trend line here. And then we get down towards 3,000. We don't quite break it, but we just kind of chop up and down and go sideways. We just kind of move and go nowhere. This is actually another scenario where you step aside and do nothing, but this can be very dangerous, especially if you only want to trade in Bitcoin, because this could be a situation where you start to overtrade. Okay. Now, overtrading is caused by a choppy market, and this would precede us to a choppy market. In choppy markets, traders tend to get anxious for a trade, and this is where you could lose money quickly trying to buy every move, and in a choppy market, moves are sold into immediately. So this is a small form of a choppy market. This is a small form of a choppy market. This is a form of a choppy market, right? Where you're just kind of trendless. You don't break up. You don't break down. This is a choppy market. This is actually probably the best example here of a choppy market. It goes up, goes down, goes up, goes down, goes up, goes down. You know, it's just really trendless. Really nothing is happening. And if you're trying to buy every move, it can really be exhausting. It can really be exhausting. So you need to know what to do in a choppy market. And my key is just to step aside. Just to step aside. Now, if we bounce really nicely, off the 3,000 level, I'm going to use this as an actual example of that. Let's just say this is the bounce off 3,000, and we have this really nice volume up here. We consolidate, and then we pop up again. So where is your good entry in here? Where's your good entry in here? First of all, if the volume is really good, I say you enter whenever you have the ability to, okay? You enter whenever you have the ability to. Now, if you miss this move up and we consolidate up here, this is a perfect entry point. Even if you bought here, you should still consider adding up here. Your entry here should be a little smaller, though. You don't really want to load the boat too low. If you have a position in Bitcoin, you want to say take a $5,000 position, I would buy no more than $2,500 here. I would take no more than 50% position here. Reason being because anything can roll over at any given time, okay? I hope you kind of realize that by now, but you really want to be safe with your money. If you don't want to lose money, you take no more than a 50% position here. Maybe if you got in really low, like if you got in at this bottom right here, if you got in with your 50% here and it comes up and you have this little consolidation, you can maybe add here and add here, okay? But you would like some kind of a higher level consolidation and then a breakout to confirm that move. So that's good. Now, what if we break down below 3,000? Let's say in scenario 2 where we have a hard breakdown and then a consolidation, and we do break down again, where could we go? I'm not going to get too deep into that. I do have a video called Bitcoin 1200. I'm not trying to scare you, but you can look at that for a possible long-term bottom. But if we do break down, where could we break down to and see some possible bounces? Okay, now this 2400 level is going to be a really good test because it's not too far down below 3000. Basically about 20%, pretty simple math there. About 20%, that would be a good place to bounce. And also we're going to have 1850 here. 1800 is going to be your next logical area of support. So we already tested 3000. If we break below 3, we're going to have these two levels to contend with. All right. Now that being said, Bitcoin 3000, in my opinion, is going to take some time to play out. It's not going to happen tomorrow. It's probably going to happen a week, 2, 3 weeks. It's going to take a week or so, maybe up to a month to play out. We're just going to kind of have to wait and see. Now, if you notice, this declining trend line comes to an end at about 10/11, so October 11th, which would put us right at about 3 weeks. So usually these patterns play out underneath these declining trend lines, and I would anticipate that to happen somewhere in here. Now, if you do have a position in Bitcoin, I want you to run these scenarios through your head, okay? I also want you to comment down below what you would do. Number one, because YouTube likes that, but number two, I want you to hold yourself accountable, okay? I want you to say, this is what I would do, and putting a comment down below there, we can all hold you accountable. If you say you're going to sell and then we call you out on it and it happens and you don't sell, I'm going to call you out on it personally probably if you comment down there. If you're a subscriber, I talk to pretty much everyone in the live stream. I do like to give you counsel, and I will hold you accountable. So if you need a trading mentor, be active. Be active in the channel, and I will act as a sort of mentor for you guys. So go ahead and put the comments down there. That's the video. Subscribe if you've enjoyed it. Like the video if you actually liked it. YouTube likes it when you do that. And there you go, guys. Thank you very much for watching. I will see you on the live streams. I do one every day at about noon, so I will see you then. Have a good night.